Sup guys, your boy Quick Stocks here, and if you couldn't tell by the title, of course we're going to be covering Alphabet Inc., or as us degenerates know it, Google McDougal. But before I get into the Quick Stocks, I'm going to have to go over some basic fundamentals, so let's get right into it. Quiz time! Alright, so let me ask you this. When we're purchasing long-term shares of a company, our goal is to...
I don't know. I think I'm trying to make some money.
Well, yes, obviously, but strategically, our goal is to beat the market. It may sound obvious, but low-key, this is the bread and butter of stock market investing. But I mean, really, what does that even mean? Well, friend, let's take a look. So here's our example. We have a participant that we shall call Bobby McDougal. If Bobby McDougal were to put his money into a basic index fund like a NASDAQ 100, on average, he could expect around a 10% return. Meaning if he put $1,000 into the NASDAQ 100, on average, he could expect to have a total net asset class of $1,100 a year from now. So hopefully you understand what I mean now when I say we're looking for companies that will outperform the market. And of course, we have a few different investing options. So let's take a look. First, we have spec plays or speculative plays, in which I have the ability to make large gains with a higher degree of risk. These may be penny stocks, emerging markets, options, etc. And another trading strategy is blue chip investing, where I can purchase a huge company with an excellent reputation that is well established and financially sound with a market capitalization in the billions, if not trillions. Companies that are so ingrained in society that my risk tolerance will closely mimic the overall market. And during good economic years, I can expect anywhere from a 1 to 10% beat over the market, which can exponentially increase my future value if we're talking about a constant 4% beat on the market for 10, 20, 30, 40 years. Just to give you an example, if our participant Bobby McDougal invested $10,000 for 10 years in the NASDAQ 100, after 10 years with a 10% interest, Bobby McDougal's future value would be nearly $26,000, which of course is nothing to laugh at. However, if Bobby McDougal were to have invested that 10 grand for 10 years into, say, Google, where historically it has seen closer to 15% returns, Bobby McDougal's future value would be well over $40,000, which of course is why we're going to talk about Google. So after that long-winded intro, let's get right into it. It's kind of interesting, so let's take a look at how Google McDougal has performed against our benchmark, the NASDAQ 100. So when looking at Google's 3-month chart, you can see it's actually closely mimicked the NASDAQ 100 in the last 3 months. However, when you scroll out, that's when it starts to get interesting. If we look at the 1-year chart, you can actually see that Alphabet has underperformed the NASDAQ 100 in the last year period. And of course, this could be for a number of reasons, which I'll get into later. But when we check out the 5-year chart, that's when we notice some significant differences between the two. In the last 5 years, Google has seen a 105% return, whereas the NASDAQ has seen 66%. Alright, so now that we actually have our benchmark out of the way, let's take a look at the company. Okay, Google, what is Google's share price?
As of 7:48 p.m. Eastern Daylight Time last Friday, Alphabet Inc. Class A is trading at $1,060.25.
Okay, Google, thank you.
My pleasure.
Okay, Google, play Bob's Burgers on TV.
Alright, Bob's Burgers from Hulu. Playing on Addict TV.
Y'all may think I'm just lazy, but you know what? So is everyone else. And when we want our dopamine, we want it now. And if that dopamine is Bob's Burgers, we want it now. Okay, Google, stop. But for real, I'm convinced that smart appliances are going to be in every developed household in the future. And of course, this is just a sliver of Google's ecosystem. Sorry, I'm getting off topic. We're doing quick stocks. All right, as Google informed us, Google's share price is $1,068, down 30% from its highs seen last month, with a market cap of $735 billion, with a PE of 21, which historically speaking is an extremely attractive PE for Google. So let's get into Google's ecosystem. All right, let's be real. It only feels right to start with YouTube. So YouTube generated nearly $5 billion in ad revenue in Q4 2019. in total generating 15 billion in 2019 with a 36% increase from 2018, which contributed to roughly 10% of all of Google's revenue. Google also has 20 million plus subscribers on YouTube Premium and Music, bringing in absolutely massive gains, which aren't even being included in that $15 billion advertisement gain YouTube saw in 2019. Alright, next we're going to go over Google's search engine, which generated $98 billion in 2019, with a 15% increase. Google processes over 40,000 search queries every second, which is equal to over 3.5 billion search queries every day. And of course, this brings in money because of the ads. Of course, Google McDougal's revenue is largely made up from their ad companies, with companies like AdWord, AdMob, AdSense, etc., which amounted to $134 billion in revenue in 2019. And the beauty of Google's advertising is that they've already incorporated it into a majority of their ecosystem, which is great because the US online advertising revenue is expected to reach $275 billion by 2020. Of course, giving Google tremendous opportunity, with Google having a 37% digital ad spending market share. All right, next let's get into Google's smartphones. So it only makes sense for one of the largest players on the internet to have their own smartphone. It makes it easier to create an all-in-one experience. In 2019, Google Pixel sales are estimated to be between 10 to 12 million units, which is actually a miss in regards to analyst expectations. If we look at premium smartphone rankings by region in 2018, we see that besides in North America, Google isn't available or as popular around the world. Granted, I should note that Google's flagship phone, the Pixel 5, is expected to be released in October 2020, which should help sales. Alright, next, let's get into Google's self-driving cars. Waymo, Google's self-driving car project, is valued at roughly $100 billion. Self-driving car units could generate as much as $114 billion in revenue by 2030 through ride-sharing services that allow customers to book a ride through their mobile device. And of course, this technology is a competitor to our boy Tesla's Autopilot. Currently, Waymo's annual cost is nearly $1 billion, while its taxi business generates a laughable few $100,000 a year. And of course, self-driving is still a battleground, with a golden ticket presented to whom can cross the line first. And of course, we have Android and the Play Store, with over 2 billion active devices running Android, with an 86.6% market share when it comes to worldwide smartphones, which is absolutely insane. And of course, as we already started to talk about, we have Google Nest, which is their line of smart products, including smart speakers, smart displays, streaming thermostats, smoke detectors, routers, security systems, doorbells, cameras, locks, light bulbs, etc. This video would go on all day if I tried to cover all of Google's projects, so I'm briefly just going to list a few. Firebase, a mobile and web application development platform. Makani, which is a leader in developing airborne wind turbines. Google Stadia, trying to bring people A-list games without a console or download. Stackdriver, which is a hybrid cloud solution. Calico, biotech company focused on health and well-being. DeepMind, an artificial intelligence company, which you can see its AI learning to play Atari Breakout. Yep, that seems like a good investment. And as crazy as it may sound, this is still a fraction of Google McDougal's company. Realistically, with our life becoming so ingrained with the internet and tech, it seems Google is one of the companies posed for yet another great 20 years. However, this brings us back to our question. Will Google McDougal outperform the market? Well, I'm not a psychic, so I cannot predict how Google's going to be doing 10 years from now. However, what we do know, with a current PE of 21%, and over $100 billion in liquid cash reserve, and nearly a 30% correction from its highs, with a sound backbone in Google Search and YouTube and all of Alphabet's other side projects, it would be a fair argument to assume that Google will outperform the market, in return rewarding long-term Google investors. However, we have seen countless failed projects from our boy. But I mean, low-key, it's one hell of a flex to be able to say, I own a part of Google. Okay, Google, I own you.
I Own You by Shinedown, sure. Playing on YouTube Music.
Hey guys, just checking in. So I filmed this video as of March 22nd, and futures are actually predicting Google's gonna drop like crazy tomorrow, so I would wait a few days before you actually buy anything. Just letting you guys know. Yo guys, I hope you enjoyed the video. If you did, leave a like, subscribe. If not, it's all good. I still love you. See you guys tomorrow in the next one.